Nvidia stock today got hit with two bearish news that I think every semiconductor investor should be familiar with. Now, I don't want to hold your time hostage, and I know you're probably busy, so too long, don't watch. The two main things that impacted Nvidia stock today is first, we did get some AI regulations that are a lot stricter than the ones we previously had and impact Nvidia. The second is we are hearing reports again about overheating issues and how that might create some tension with some orders in the first half of 2025. So my overall thoughts, I do believe both these things are not necessarily nothing burgers, but nothing that really changes my overall thesis for Nvidia at the moment. So those are the main points of today's episode. If you want to know more about each topic, feel free to stay for the rest of the episode. Make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for special offer at fool.com/Jose. Check out my free daily semiconductor newsletter, What the Chip Happened, and check out the link down below for my earnings ebook now that Q4 earnings are starting up right now.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so Nvidia stock was down roughly 2%, but earlier today, the stock hit below $130. Now, like I mentioned, there were two big things that really impacted the overall stock today. I want to say the first thing is the AI regulations that just came out from the White House and the Biden administration. I actually did an episode on that earlier today, but again, too long, don't watch. I believe that the market right now is pricing that the Trump administration is either going to remove these regulations because if not, I do believe the stock should have been down a lot higher than it was, right? So it seems like right now the market is not expecting these regulations to really go through, as there is about 120-day grace period. I shared my overall thoughts. Now, some of you guys were wondering, Jose, what are your thoughts on the United States? Should they really be regulating this stuff or should they not? I think for anything, there's always the perfect medium. And it does seem like these recent regulations that just came out were a little bit over that medium, right? Or a nice amount over the medium, as we saw a lot of big tech companies kind of fight it. Not just Nvidia. We heard reports from other companies like Oracle and Microsoft. And again, that previous episode that I did discusses a little bit more in depth, but I just wanted to share my thoughts as I did have some questions about that. I believe regulations, at least when it comes to this AI due to national security, there has to be some middle ground. But right now it seems like it's overreaching that ground. And I think that's the hard point for anything in general, is trying to find what is the perfect middle ground. So that's the first thing. And this is obviously creating some bearish sentiment. But like I mentioned, I think the market is not expecting these regulations to be a thing with the next administration. Now, the second big bearish thing that came out for Nvidia is the information came out with another article that Nvidia's top customers face delay from glitchy AI chips rack. And this is more on the Blackwell platform, the B200. I'm going to say, I feel like every other quarter we hear this about the B200, about some issues about this platform and how customers are decreasing their overall orders. But yet at the same time, anytime we hear Jensen or any of their top management talk about the demand for their products and the production of the Blackwell platform, they say that everything is fine. So someone has to be lying, right? And I honestly have to say that management has had ample amount of time to really tell us if there's an issue, and they haven't. So I'm gonna have to bet right now that these heating issues, while might be true, might not be as big as this article by the information is making it seem. So I don't think this is necessarily anything bearish. I think we've heard about this before. And if it is bearish, in about a few months from now, Nvidia is expected to release the B300, which is going to continue to drive demand for the overall market. And I've talked about it in the past. The only time and again, I'm saying that I don't believe there's a delay, but if there is a delay, I always think, what is the worst case scenario? And the worst case scenario is the customers will go to the competitors of Nvidia. Luckily for Nvidia, the competitors of the B200 is no one else except Nvidia's H200 or H100 platform, so the Hopper platform. So if there is some weakness in the Grace Blackwell, there's still plenty of demand for Hopper and the Hopper 200. So, and again, gives NVIDIA ample amount of time to, if, and again, I believe, I don't think there's any of these issues, but if there were, it gives them ample amount of time to kind of release the B300 and still have strong demand for their solutions. So that's the first thing. And we did hear reports that Seeking Alpha mentioned that NVIDIA data center customers are not delaying orders despite report. And this is based on someone from Google, I believe here. However, data center orders are going as planned and not undergoing any delays according to a source close to the matter at Google. So again, it seems like nothing major is happening here, and it's just a lot of noise that could be scaring investors. As a long-term investor, I believe this is a stock that's going to continue to be very, very volatile, and there's going to be news like this that come out very often. And if you are weak-handed, it is going to scare you off of your position. So that's why it's important to always understand the company that you own. Now, something that I thought was pretty interesting is based on these rumors of some issues with the Blackwell 200 platform. HSBC, which tends to be very, very bullish on Nvidia, actually reduced their price target. So they reduced their price target from 195 to 185. The decision reflects ongoing supply chain pressure associated with the Grace Blackwell 200, which are expected to persist into the first half of the fiscal year of 2026. Remember, for Nvidia, they are about one fiscal year ahead. So their fiscal year of 2026 is pretty much calendar year of 2025. Now, on this report, it says that the research indicates that a weaker performance is anticipated in the first half. However, NVIDIA is expected to see the strength in the GB200 and the B200 platforms, which is expected in the second half of fiscal year of 2026, right? So, aka the second half of calendar year of 2025. I'm going to say 185 is still very bullish. The stock is sitting at $133. And what's more important is, even though this company reduced their price target, they also reduced their overall earnings potential estimates for this fiscal year, and they also reduced their earnings per share. All of these, even after reductions, are above consensus. So, for example, HSBC reduced their revenue expectations from the data center market to $236 billion from an earlier estimation of $253 billion. Now, the overall consensus is about $196 billion in fiscal year of 2026, right? So, calendar year of 2025. So, even after HSBC reduced their numbers on Nvidia, they are still very, very bullish on this overall company, and their estimates are still much higher than the overall consensus in forms of revenue and earnings per share. And this is something that I think that could be a possibility that I think investors should also kind of consider. That even though Nvidia's can see weakness to what they really could do, even with that weakness, they can still be estimates, because we really don't know how this AI market is evolving. And these AI market can be evolving at a faster level than analysts' expectations. And I think HSBC is a perfect example of that, where revenue estimates, even on a bearish case, are still much higher than the consensus for Nvidia. So I think we're going to continue to see volatility in the stock, especially in the change of administration, with things like tariffs and other types of regulations impacting the overall semiconductor market. As a long-term investor, though, I am still very much bullish in Nvidia. And now that we're getting at those $130, I think this is where, if I had a smaller position, Nvidia is already my biggest position, so it's very rare for me to buy. This would be a moment where maybe I would start nibbling and dollar cost averaging at these 130 levels. If it hits the 120s, I think that's very attractive, and anything below there, even me with my biggest position, I would definitely nibble in more and more shares. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.